Hello, my name is Chris Shea. I'm a financial advisor with BPS Financial Services. And this is a presentation on Charge It Right, AKA utilizing credit. Agenda, going to go over that in a bit. Ground rules, I'm going to introduce myself a little bit more. What do you want to learn? What do you know about charging it right? Ground rules for this, pretty simple. Have questions, write them down, ask me at the end. I'll get back to you. We'll have a conversation around it. Objectives. Determine if you're ready to apply for a credit card. Determine which credit card is best for you. Describe how to use a credit card responsibly. Yes, there are responsible ways to use a credit card. Identify steps to take when a credit card is lost or stolen. Again, my name is Chris Shea. I'm a financial advisor with BPS Financial Services. I'm a financial planning and implementation partner with all my clients. I help them make a plan. I help them execute on it, stay on track, and review it. What is credit? Well, which answer do you think a professional would say of these choices? Credit. Money given to you that you do not have to pay back. Recognition for a job well done. Money you borrow to pay for things, but must also pay back. Or scrolling text at the end of a movie. All right, you got me. Money you borrow to pay for things, but must also pay back. That's what credit is. Okay. Credit defined is the ability to borrow money. Loan is agreement to borrow money on credit. Collateral or guarantee, that's security or an asset you pledge to the lender in case you can't repay the loan. And interest is the cost of borrowing money. Basic definitions. Hopefully gives you a baseline. Importance of credit. Credit can be used in case of emergencies. Car breaks down. Got to take an emergency trip to see a loved one who's fallen ill. Emergencies pop up. Credit can make it useful to be able to quickly and easily get what you need accomplished. More convenient and safer than carrying a large amount of cash in your pocket at all times. Allows you to make a large purchase such as a car or house and pay for it over time, right? And it can affect your ability to obtain a job, buy or rent a house, or obtain insurance. If your credit invisible, which we can talk about, it might be really hard to get some of those things. Good credit. What does it mean? It means you borrowed money and you're making your loan payments on time. When you have good credit, it can make it easier to get more credit in the future. If you have problems using credit responsibly, you may find it harder to get it in the future. So try and get a good credit score and keep up a good credit. Buying a car. Steve and Maria need another car. They have some money to put down. Still need to borrow 10 grand to purchase it. If they do not pay back the loan, what can the lender do? What might they do? I'm going to take the car back. What is a credit card? Credit cards are a revolving line of credit. They've got usually a pre-approved dollar limit, 1,000, 2,000, 5,000, 10,000, whatever that is. Minimum monthly payment. Say you've got a $600 balance, they can require you $15 into it. And they're going to charge you interest over time. Charge cards, on the other hand, they require you to pay that monthly balance every time. You're charging things and then paying it off. It gives you flexibility. Usually there's higher limits because you got to pay it every month. And debit cards, very popular now, they're tied to a checking account. If you've got the money, you can use the card, takes the place of cash. Pretty useful and handy. Other cards, stored value cards. Okay, this is where you put money on it. As you use it, there's less money on it. Secured and unsecured credit cards. This can be secured by some sort of collateral, or unsecured, where they're just giving you the ability to use $5,000, $10,000, $1,000, whatever the case may be, in an unsecured credit card. And there are gold and platinum cards out there. that might cost you a little bit more in an annual fee, but they usually have better perks and benefits. Some people like to have those. Rewards cards, frequent flyer cards, cards for hotels, cashback cards. There's all sorts of rewards out there. Do some research. You'll find a card that you like to get you the rewards that you want. Pre-approved cards. Get these in the mail all the time. Pre-approved for a credit card. Well, then we're going to check your credit and find out how much you can afford on a balance. 500, 600, 1,000, 10,000. Beware of pre-approved cards. Truth in lending disclosure. They're required now by federal law. They've got to highlight the rates, fees, and other key terms. Sample interest rate section on disclosure is here in front of you. Going to show you the annual percentage rate, APR for balance transfers, cash advances, penalty if you failed to pay. What's going to be the penalty? They got to let you know. All right. There's a lot of fees, a lot of terms when shopping for credit cards. You want to compare the APR for purchases, balance transfer, cash advances. Take money out of a bank, out of an ATM machine. What's that going to cost you? And penalty in the APR. Fees in the annual fees. Grace period, if there is one. You want to find out what that is. And the balance computation method. Is it daily? Is it weekly? Is it monthly? If you put new payments on, when does that payment take place? If you pay off the card and then charge more on it, how does that work? Know what that methodology is. Annual percentage rate. Cost of borrowing money on a yearly basis. It's the interest plus fees. Okay, you want to look for a low APR. Determine how long the introductory rate is going to last and whether the new rate is going to be fixed or variable. And compare annual fees and other charges to make sure that you're getting a really low APR. The fees can be hidden in that and wind up costing you more money. Look at the APR increase on existing balances. Charges you made in the past can't be increased unless you're told about the increase when you open the account and you had the initial rate for 6 months. There's a change in an index-based rate. The federal government can change that. You don't satisfy a workout arrangement where you said, okay, I can't afford to pay this high amount. Can you knock me down for a little while? You can't make that even. They're going to change your APR. Okay. And you don't make a required payment within 60 days of due date. Balance increase on new balances. APR for new transactions cannot increase for a year from the date the card was issued. So let's say you have a variable rate card, index increase or promotional rate expires. Got to give you 45 days notice. And you can cancel the card before changes take effect. Okay. Penalty APR. You miss payments, penalty. It's a new permanent rate increase. You don't pay credit cards on time. You can double your regular APR. Look for details in the truth in lending disclosures. Fees. There's a lot of them. Annual fee, late fee, over limit fee, balance transfer fee, cash advance, credit limit, foreign transaction. AKA credit card companies like to charge fees. It's a way for them to make money. That's what they're in business to do. They're not in business to necessarily be your friend. They're in business to make money. And the more fees they can charge you and get away with, they're going to do it. Be aware of them, know what they are. Customer service. Telephone, internet may allow an app, right? Can access your account, pay your bills, update personal information. But if you got a challenge with paying your bills, you're going to want to pick up the phone and give them a call. Beware of laws that protect you against billing mistakes and unauthorized changes, right? Know that there are other things that credit card companies can provide. Extended warranties for purchases, okay? Take the time to understand what your credit card can do for you so that you can take best advantage of it. They want to take advantage of you by offering you the card and charging you interest. Know what you can get from them. Be a smart consumer of credit. Credit card limits. It's the maximum amount you can put in your credit card based upon your history, current income, debt to income. Are you good with credit in the past? Have you been bad with credit in the past? Where are you with your money? It's going to impact your credit limits. Sometimes credit card companies up your limits because you've been a good client for a while. And they want to have you put more credit on there so they collect more interest. Know what the reasons are? Make good choices. Where do you apply for a credit card? Where do you think would be good to apply for a credit card? Bank, stores, internet, all the above? Well, it depends upon what benefits you're going to get from applying for those credit cards. Opt out. You have the right to opt out from receiving mailed credit card offers. There's an 88800 number here. Optoutprescreen.com. Call the phone number on the credit card offer. Don't just keep getting the junk mail. If you want it to stop, you can make it stop. Make it stop if you want to. Here's some ways to do it. Individual versus joint credit. Again, if you're in a relationship, sometimes it may be better to get joint credit. Individual, it's always going to be based upon you, the individual, and your history. You're solely responsible. Joint, it's going to be on both people. Buying a home, credit cards, car loans. Bigger purchases tend to have more joints in terms of the applications. Smaller purchases, it's usually going to be an individual. Application requirements. Consumers under age of 21 have a co-signer, aka a parent or guardian. They got to prove the ability to make the payments. When I was in college, they would just give you a credit card just because they wanted to, and none of this was in place. It's become a lot more difficult. If you're a parent, be ready for that request to co-sign. And you got to provide accurate information on credit application. False information, that's a crime. Make sure it's all correct. 4 C's of credit: capacity, capital, character, collateral. We're going to get into this a little bit. Capacity. How long have you been in your job? How much money do you make each month? What are your monthly expenses? Is your income better and higher than your outflow? Can you afford the credit? That's your capacity. Capital. How much money do you have in checking and savings accounts? Do you own a home? Do you have other things like cars, paintings, boats? What other assets do you have? That's your capital. What are you worth? They're going to want to know. Character. How much credit have you had in the past? How have you handled it? Have you ever had to file for bankruptcy? Outstanding judgments against you? Missed payments? Foreclosure on a property? All this is going to affect your character, which is going to impact the way in which a credit company looks at you. Collateral. Do you have it? Do you have a home? A car? If you can't pay off the loan, they're going to take it. All right? You want to deal with reputable loan providers. Shop around. Find out the best deal. Read everything. Understand it. Ask questions if you don't understand it. Don't get into something like buying a home without understanding it fully. And make sure you can make the payments going forward. What do credit card companies look for and creditors look for? Well, they look for a lot. They're going to look at your credit report. They're going to say who you are, how much you owe on different things, whether you've made your payments, bankruptcies, judgments against you, how many credit report inquiries have been made. That's a big one, because if it looks like you're trying to get more credit, people are going to shy away from giving you more of it. But they're going to look at your credit report to make sure of it, that you're a good person to give money to. No history is also a bad thing. All right. This is an example of Kathy. No credit history except for an inquiry made by her landlord when she rented her apartment. Never had a credit card or a loan at age 25. Who's going to give her a loan? How is people going to know if she's worth the credit risk? she's got to establish credit, even if that means taking out a prepaid credit card or something else. Start to establish some credit. Make yourself visible. I know it can be scary, but step out. It's going to help you in the long run, be able to take out loans on other things, such as homes and cars for yourself. There are three big credit reporting agencies: Equifax, TransUnion, and Experian. They've all got different algorithms. We go through a whole presentation on this, on how they kind of figure things out, but there are credit agencies out there. You can also get an annual credit report from annualcreditreport.com annually. Do that. It's in your best interest to know where you stand. There's a phone number, mailing address. You can look them up. Credit scores. Again, there's a FICO score and a Vantage score. They've got different scales. Essentially, it's excellent to poor. They got percentages that they put people into in these. Again, they're just numbers. Know what the numbers are, though, to see if you fit in, where you fit into that. Your credit request is denied. You're going to get a notice. They're going to have to tell you why you were denied. They've got to give you the reason. And you got the ability then to contact a credit bureau within 60 days to find out that reason. And you can dispute it if there's any inaccuracies to see if you can get that credit again in the near future. Credit card statements. You're going to have the account summary, payment information, credit counseling statement, notice of interest rate changes, transactions, account history, interest charge calculation. They're going to break it down very detailed for you. They have to. It's law. Okay. You got a credit card? Read your statements. Find out what your interest rate is. Find out what you're in charge and interest. Keep good records. It's a wonderful thing when you go back to have your records. Keep monthly credit card receipts, compare the statements, check your monthly statements for mistakes. It's a lot easier now with apps. You can go in and check it on a daily basis. If you've spent money, you can see it's there. If you didn't and something's on there, you can dispute it right away. Report the mistakes, though, as soon as you see them. Minimum payment. There's good reason to make a payment and also to pay more on than your minimum. If you pay more than the minimum, it's going to look good. You'll be able to spend it again once you paid it off. Credit card company will increase your limit faster. Again, this could be good and bad. And it can also help you pay it off faster and save on interest charges. There's actually now going to be a calculation of if you pay your minimum on there and if you pay an additional amount, how much quicker you pay it off and how much money you save. Take a look at your bill. The answers will be there for you. Again, we're going to show you the cost and the benefit here in a little example of paying off a couple of items. TVs, $500, 18% APR, total paid in 3 years, $632, paying off the minimum payments. Computer, $1,000, winds up costing you $863 in interest, 8 years to pay off. Furniture, $2,500. You wind up paying 23 years with a minimum and $7,863. That's a huge amount of money that you're paying. Try and pay more than the minimum. Okay. We've got a little calculator here. Minimum payment on the $2,500. Again, 23 years, $5,000 in interest. Pay just $24 extra a month. It goes down to 4 years to pay off. You can pay $1,000 in interest, $3,500 total. That's $4,000 for $24 a month. Huge. Go up to $41 a month above the minimum. Only wind up paying $3,200 or $754 in interest. That little amount, the first $24, is much more important than anything after that in this example. Know what the benefits exceeding the minimum are for you to not spend as much money in interest and make that additional payment. $24 a month. That's 5 cups of coffee at a store. Not that hard to come up with. Activity 1 and participation guide. I'm going to read scenarios, determine whether or not people are using their cards responsibly, and describe what could happen to each person if they continue to go down the path that they're choosing to go. If you got questions about it and want to talk about it, feel free to reach out. Happy to have a conversation. Hopefully you've learned about some things now to help you charge it right and make better choices with your money and revolving around credit. If you got any questions, feel free to reach out. I'd be happy to answer some specifics around your circumstances. Got some evaluation? I'd love to hear it. Love feedback. Helps me become better. And again, in conclusion, hopefully you've learned the characteristics of credit cards, how other cards are going to be similar to credit cards out there, different types of credit cards, how to shop for the best credit card terms, how to apply for a credit card, how to use it responsibly, because yes, you can use it responsibly. It can wind up being beneficial to you. And how to pay your credit card bills. Okay. And last but not least, if your credit card is lost or stolen, notify your card company immediately. Don't wait. Let them know. Take care of that as quickly as you possibly can. So again, my name is Chris Shea. I hope that you've enjoyed this presentation on charging it right. If you got any questions, again, feel free to reach out.